Amazon recently reported its Q3 earnings, and it is not a pretty picture. So today we will take a quick look at the results, and then we will analyze Amazon and calculate the intrinsic value of this company. Cash and cash equivalents are down a bit, but this is not really worrying. What is worrying is a long-term debt, which went up by over $10 billion in 9 months. The revenue is up, but net income for the first 3 quarters was just over $19 billion in 2021, but this year it is a loss of $3 billion. So that is not good. And what is really worrying for me is the free cash flow. It is a negative free cash flow of almost $20 billion. So Amazon missed analyst expectations and the price went down around 15%. And the reason for that lies not only in poor results, but also a weaker forecast for the fourth quarter. Amazon said that it expects the fourth quarter revenue somewhere between 140 billion and 148 billion, representing year-over-year growth of 2% to 8%. And for a company that puts so much money into investments, innovations, etc., 2% is really not a lot. Okay, so now let's take a look at the big picture and analyze Amazon. First, let's find out who owns the company. Individual insiders, that is a check. Individual insiders own 9.8% of Amazon. And that is including Jeff Bezos, who owns 9.78%. So we really know who has skin in the game. And are they buying? That is an X. Insiders are selling a lot through August, September and October. And what about super investors? It is a check. 24 of super investors own Amazon, and that makes it the 6th most owned stock by smart money. And are they buying right now? That is also a check. Q2 and the data that we have from Q3 show that super investors bought almost 18 million shares and sold over 9 million. Okay, so now let's take a look at the financial health of Amazon. Return on invested capital. That is an X. It is 6.8% and we are looking for a return of over 10%. And what about free cash flow growth? That is also an X. They have a negative free cash flow. In 2020, it was over 31 billion. In 2021, it was negative 9 billion. And in the last 12 months, it is almost a negative $20 billion. So that is a red flag. And let's see the net profit margin. It is also an X. It is 2.4% and Alibaba has 4.7% and Pinduoduo has 19% net profit margin. So that is not great for Amazon. And shares buyback? Also an X. 12.4% extra shares were issued in the last 10 years. They bought some shares back last year, but if we look at the long run, the investors are getting diluted. And the debt, like everything else, is an X. It would take Amazon over 6 years to pay their long-term debt with their 5-year average free cash flow. And we have to use a 5-year average free cash flow because the recent one is negative. So it is not a pretty picture. And does Amazon pay dividend? That is an X. They do not pay any dividends. And maybe it's a good thing because they just don't have the cash flow to afford it. Okay, so a lot of problems for Amazon, but let's use a discounted cash flow formula and value this company. But before we start, I just want to notice that Amazon has a PE of around 90, so do not expect it to be cheap. And we will use a 5-year average free cash flow because, as we know, the recent free cash flow is negative. Okay, so we will have to estimate the growth of Amazon for the next 10 years, and we will make 3 scenarios of different growth rates. And in the low scenario, 20% for the first 5 years and 15% for another 5 years. In the medium, 25% for the entire 10 years. And their revenue growth for the last years was around 25%. So in this scenario, we assume that they will continue to grow as they did before. And in the high one, 30% for the entire 10 years. And you may find predictions of 50% growth, and maybe I am too conservative, or maybe I just do not understand this business, but 30% for a company that is worth over $1 trillion is just the maximum my small brain can comprehend. So with such estimates, the intrinsic value is $37 in the low scenario, 62 in the medium, and 89 in the high one. But these are not the prices we should be buying Amazon for, because we always have to add a margin of safety. I use a 30% margin of safety, and that allows me to be slightly wrong in my estimates and still not get into any serious trouble. So with the margin of safety, we have $26 in the low scenario, 44 in the medium, and $62 in the high one. And the current price is around $91. So it is all in the red. But it is really close to the high scenario without the margin of safety. Berkshire Hathaway bought Amazon in Q1 2019, but it is only 0.4% of their portfolio. So Warren Buffett owns a small stake in the business, but I don't see Lilu, Monish Pobrai, Guy Spier, Pat Dorsey or Robert Vinal as investors. And maybe the reason is that there are just too many red flags with Amazon. I don't have to understand every business, and I can pass on anything I don't understand, and that is, absolutely fine. So a company with a PE of 90, a negative free cash flow, and a lot of debt is a pass for me. But of course, you have to make your own decisions. Just remember to do your own due diligence and treat this analysis only as the first step in understanding Amazon. If you love this company and think it is a great investment, then let me know in the comments. I'm really curious on your way of seeing this company. Okay, that's it for today. If you found this video helpful or interesting, then please like it and consider subscribing if you want to see more videos like this one. Thanks for watching and see you in the next one. Bye bye.